Hey guys, good afternoon, everybody. Today is Monday, August 1st. It is the first of the month. This is our mentoring session for today. It's scheduled for 2 o'clock. It's 1:59 right now. So I'm going to go ahead and set up this room real quick, and then we can get started with our session for today. So just give me a few seconds to set everything up here for the stream, and then we can get started with the questions for today. So we got a couple of things here set up. That's set up. Some last minute things down here. Get the date, station, type, and I think we're good. All right, yeah, it looks good. Let me get this link sent out to you guys here in the premium. All right, looks good. Link sent out. We'll give it a few minutes for people to join. All right. Daily still running. Let's see what else we got over here. Oh, entry here. One entry right there. All right, so good afternoon, everybody. Today is Monday, August 1st. It is 2:02 right now. Scheduled mentoring sessions for 2 o'clock. So I'll give it a few minutes for people to join. But if you guys have any questions, feel free to put your questions in the chat, and I'll answer whatever questions you guys have today. I'm just looking back to see if there was any entries here with regard to the intraday. So there's a couple of entries here that I can see. I mean, obviously I wouldn't have taken this because I was asleep at 2 o'clock this morning. But just looking back at the entries today, there's a couple entries here that came up for the 10-minute intraday. So I haven't been applying this strategy because I'm just focused on the breakout 1-minute daily counter trend and 3-minute counter trend. But just looking back at this 10-minute intraday, there's one right here. There's a trend continuation. They didn't overlap. This is your valid momentum signal here. It lined up with the trend meter. So this would have been an entry for the intraday. It doesn't fit within the parameters for my trading time because I'm typically asleep at this period. But if you guys would have taken this during London session, this right here would have actually would have hit stop loss. So there's probably a good reason not to take this one here. If you guys remembered my no trades between these periods, this is because I try to stick within the with the New York session, basically. New York session, this is where it gets a little tricky for trading London, because you can see right here from London it was bullish from right here, which was London open. And then when price pushed up, it tends to reverse as it gets closer to New York. So you can see from this point right here, this is where the reversal happened. It went from this London push, and then basically an hour from New York open, it started to push down right here. So this is typically why I normally don't trade during these times. Also, I just realized that this was on Sunday, so I wouldn't have. I mean, we typically don't trade on Sundays for this specific reason. There's no direction at all. But I think there was one that fit the parameters. So there was one right here. Okay, so this is one that I was looking at earlier. Basically, looking at this intraday entry, you're looking for a valid K2 momentum signal matching the trend meter. So this is a green momentum signal. It's valid because it's a green candle within a green momentum signal. The trend meter down here is green, so this indicates an intraday entry. You want to confirm a two previous high lows that don't overlap. These right here do not overlap. Identify two patterns. So there's a variation right here, and then right here is an engulfing. So that's requirement number 2. They don't overlap. And with that said, you take this for an entry. I think this would be too big of a candle though. Yeah, so this is too big. This wouldn't fit the 5th requirement. You're typically supposed to skip it if it's more than 500 pips. I know some people still do take it. This is just me being conservative. But if you did want to take this trade here, this looks like it would have hit TP. So just looking over this intraday entry, I think that's all that came up today though. There hasn't been really too many. That was the only one. This one over here was not valid because there's these high lows overlap, this one and this one right here, and there's nothing else after that. So yeah, guys, if you guys have any questions, feel free to put your questions in the chat. A couple of things that I wanted to cover today was the breakout. So after a review of the breakout, me and Maddie were talking about it, and looking at the breakdown of it, the breakout should have been a sell. We were looking for the buy because I was so set on the bias for today, but after further review, it was actually a sell. So let me just go over that real quick, guys, to show you what I'm talking about. So the reason why we would take the sell is because the confluences were pointing towards a sell instead of a buy. So let me just go back to the breakout over here. I will put the requirements here for the breakout. This candle, like the problem with this entry right here, if you guys remember from this morning, was that it was giving two different, like it was pretty much giving us an okay for a buy, but at the very last minute, this candle right here, it established another low. So this over here was now overlapping. So if we didn't have this right here, we would have been okay with the buy. But the problem with this here is that this came up like at the very last second, like literally the candle before our entry right here. And it pretty much invalidated that confluence. So let me go over here and put the requirements for the breakout. And this is going to happen, right? You know, the more and more we apply this strategy, the easier it's going to be for us to identify the confluences. But there's going to be times like this where you get one candle that throws you off right before the entry, and it just pretty much messes up the entire strategy. So looking over here at the requirements and then looking at the confluence checklist, today we took a buy, right? So for the breakout strategy, you're looking for an entry after 6:30 a.m., which can be also the opening candle. So we're looking for an entry after 6:30. This is 6:30 right here. We want to confirm the bias. Bias for this morning was bullish. So it was bullish. The trend was bearish. So just looking over at these requirements right here, we can probably ignore this because this is going to be part of the confluences, the second requirement. But just going down to the next requirement, you want to confirm the direction of momentum. We have a buy signal right here, so we're only looking for buys if applying the breakout strategy as it's originally applied. The fourth requirement, you want to confirm a strong candle in the direction of momentum. So with this candle right here, this is where it was a bit iffy. If you guys remember from this morning, I mentioned that there was a bit of a wake up here. So I wanted to wait for some retracement before I made the entry. The problem with this entry here is that I FOMO'd into this trade. You guys saw that price was kind of bouncing back and forth right here. And I was tempted to enter it because price came down and then it came back up. I should have waited longer because this candle here was so big that typically it's going to retrace, you know, either halfway or the entire candle before it comes up. So just going back to our analysis here, and let me just rewind real quick. So if we're looking at the breakout for just without the confluences, this here would have been a buy, right? And the reason for that is because we have a strong momentum candle here, a strong green candle in the direction of momentum. So this would be the buy. This is a trade that we were supposed to take. But here's the thing that me and Maddie kind of talked about after. He mentioned that the confluences here didn't align for a buy. it aligned for a sell. So we already anticipated it to lose. So we should have taken a sell instead of a buy. And it just happened at the split second right here for the candle prior. We'll look at the confluences right here. So for the buy, we have overall buys, which is bullish. That's good, right? Current trend is bearish. So we're going to mark that off. That doesn't fit the confluences. Third requirement will be here. High-low continuation, non-overlapping. They overlap right here, right? This high-low and this one right here. So that's not going to fit the requirements. High-low candle reversal. For this one right here, we'll go on the 10-minute. There is no high-low candle reversal there. So with that said, we don't have that confluence there. Already with these confluences right here, we already don't have, and we don't have any confluences here for a buy. So this was my mistake because I was so set on the bias where I was ready to take that buy and I didn't really confirm everything again before making the entry. I just pretty much waited for it to pull back a little bit, and I made the mistake by just taking it as it came up because I was so set on the bias, because we haven't had a bias in a long time. If you guys remember, for the past couple of weeks, typically in order for us to have a bias, we need this to be 60 to 65% in one direction. The thing with this here that kind of screwed me up was that I was so stuck on this because this is the long-term move. This did play out eventually, but it didn't play out for the breakout. I think the thing that we need to focus on is that this breakout is such a short-term move that although the bias is beneficial for us to trade in that direction, this doesn't necessarily mean it's going to go in this direction right away. And that's where I kind of messed up, because looking at the confluences right here, we should have taken a sell, not a buy, because the confluences didn't meet. So when the confluences don't meet like this, we actually are supposed to do the opposite, right? So we weren't supposed to take the buy here. We were actually supposed to take the sell. And if we took the sell instead of the buy, we would have hit our TP. This is the same mistake I made last week. If you guys remembered last Monday, on last Monday, I made the same exact mistake. I didn't check all the confluences. It's like a repeat of last Monday. Or I don't know if it was last Monday or 2 Mondays ago. Let me check real quick, because I totally screwed up on that entry. Let me check the calendar real quick. When was last Monday? Last Monday was the 25th. No, okay, so it wasn't on last Monday. It was the Monday before that. This one here hit TP. It was on the 18th. Man, I don't know where it's at, but it was kind of recent. I don't know if you guys remember what day it happened, but there was a day that happened. Either it was last week or the week before that. It was one of the days, and I made the same mistake. I didn't look at the confluences properly, because there was no confluences here for a buy. Confluences are for a sell. So instead of taking the buy here, we should have taken the sell. And if we did take the sell, it would have hit our TP right away. So that was my bad, guys. I mean, for this breakout here, I'm still going to count it as a loss, even though I made the mistake and it should have been a win. But I'm gonna try to take my time with the entries moving forward. I feel like today it was like a big FOMO move. Like we entered the week and I wanted to have a big win right away, and I just took the trade because I thought the bias was going to push it up, which it did. So here's the thing: price did push below. This is for the breakout, but you can see after that the bias did play out because we had a bullish bias, and you can see price just kind of faked out down here and manipulated down, and then eventually it did swing back to the upside because we already knew price was going to go up, but it just didn't happen right away. So again, guys, if you guys took loss on that trade, that's my bad. I'll take full responsibility for that. I took a loss too, so I mean, I'm hurting just as much as you guys from that trade. You guys can see from today, just being fully transparent with you guys, I did take the loss there. And losses happen, me make mistakes, whether you've been trading for 10 years or 10 days, you're going to make mistakes regardless. But I'm going to try, I'm going to do better on the next entry and take my time with the analysis, rather than jumping right into the trade. Because I even told you guys at the beginning of the session that I was like, okay, I should probably wait for this to pull back a little bit. It did pull back a little bit. When it pushed back up, I got too excited and I entered the trade. And it just got the best of me, right? So it is what it is, but we'll try to bounce back with tomorrow's breakout. Hopefully I'll analyze it properly and not jump the gun too quickly like I did today. And we'll analyze that properly for a win. So let's see. Message from Kevin over here. Kevin said, I took the same trade as you, Sean, on the breakout, but I took it for a sell. Yeah, no, Kevin took it in the right direction. That was the direction that we should have taken. Matt C said, I took the sell and it hit my stop, did not trail. Wait, how did it hit your stop, Matt C? Because, so I'm looking at price right here. Unless your stop loss was not applied properly, if it was 500 pips, I mean, it's impossible for your stop loss to hit, right? Because it would have hit your TP way before. Like it never went into drawdown that much. You enter on the close. Oh yeah, you entered like way too late for this right here, Matsy. Because this would be the breakout over here, unless were you applying something else for this entry here? Or I mean, you probably just entered late. That's probably what happened. Because if you were applying this for an intraday, it looks like it still would have hit your entry. Because if you would have gone for 100 pips, the intraday would have hit TP. So I'm assuming you just entered late. You were taking the breakout, but you chased it in the other direction. Yeah, but yeah, I can see that. So if you guys want me to cover this strategy again, we can go back and we can look at previous trades to show you exactly, how to analyze this. It's still a learning process for me too. We just started applying this way of trading because typically we wouldn't go the opposite. Like for this trade right here, if we saw this trade and we were not applying the confluences, I actually would have skipped this trade here and we just wouldn't have taken the trade at all. Because looking at the breakout right here, you want to confirm the bias, right? You want to confirm the bias. So if you were to confirm the bias, your retail segment was bullish, fundamental bias was bearish, and technical bias was also bearish. So this wouldn't have indicated an entry for the bias here. So we wouldn't have taken this at all. We would have skipped it. Let's see, question from Matty. Matty said, the wick here isn't huge, Matty. For the entry, this was a breakout right here, right? This wick here is only 70 pips. So it's not considered huge. This candle here is over 410 pips. This one right here. Yeah, this wasn't the breakout. Breakout was this candle right here. So I think you might have been confused because this wasn't the breakout here. This was the breakout right here. It was this candle. Because you're looking for so let me see, I'll put the requirements back up here. So you're looking for a strong momentum candle or a strong candle to direction momentum, basically minimal wick. It doesn't have to be like no wick, but it can't be like big, like this would be big, right? Compared to, that's what you're referring to. If you were to use this as a breakout, then yeah, for sure, this would not be the breakout. Because you can see that this wick right here is 70 pips and the body is smaller, right? So it pretty much outweighs the size of the actual body. But using this over here, this would actually, well, this was the breakout. It was just the candle was, it was just bigger than we would have wanted, right? We typically want something like this, where it's like not that big. I mean, it's not huge, but it's considered a little bigger. But if you're comparing this, so like comparing this wick to the actual body, the body outweighs it. You just divide it, 7 by 29. It's like basically 3 times, if not 4 times the size of the wick there. So yeah, this one right here would have been the breakout. 31 for sure wouldn't have been the breakout because this would have been the one here. And then this entry that you took here on the 31st, this is like, it just wouldn't be an entry because, well, there's a lot of red flags here. So like a lot of reasons why you shouldn't have taken this for any reason, like if you're applying the intraday strategy or any other type of strategy, either the intraday or high low, because I can see that there's a lot of different entries that could have came on this candle right here. For one, there's a momentum signal on this candle. So if you were to apply the high low, this wouldn't apply It also wouldn't apply for a variation because you can't have a momentum signal on the actual candle. But as you mentioned, you took this as the breakout. Another red flag is that this candle here is way too big, right? I always mention this whenever you guys look at for a trade here. If the candle is big like this, you definitely don't want to take it because price is going to retrace back either to the halfway mark, or it is going to retrace back to the full candle and then continue on for a full-on reversal, right? So there's just a lot of reasons for you not to take this entry here, even if you like saw some type of strategy, because this candle here is just too big. I mean, measure the entire candle. This candle is 720 pips for whatever strategy you could have applied for this right here. Like if you wanted to take the 1 minute daily counter trend, this would just be too big of a candle because your stop loss would be 500 pips. If it retraces even halfway, it'll probably stop you out. Halfway of the candle would have been somewhere right there. And if it got any more past that, you know, it would have stopped you out. So, I mean, this would have been like instant red flag just because of the size of the candle for whatever type of entry. So if there's anything else you guys want me to cover, anything specific, you know, just let me know. If you guys need help with like understanding what the indicators do, how can the indicators benefit you with whatever strategy you're applying, you know, just drop your question in the chat. I mean, I'm here to help you guys out. So whatever you guys need help with, just drop your question there. I don't really have anything planned for today, unless there's anything that you guys specifically want to see. Because the main thing that I'm applying right now is going to be so I'll just put right here. So basically, if you guys are just joining, or like you guys haven't been part of K2 in a while, or you guys like kind of, you know, took a break from trading. I know typically we're scalping a lot, but right now, main strategies I apply during the live session are 1, K2 US30 breakout strategy, 2, K2 US30 1 minute daily counter trend, and K2 US30 3 minute daily counter trend. So if you guys want me to cover any of the strategies, or if there's anything here that you guys don't understand, just let me know so I can cover it. These are still like fairly new, but John has done like a pretty in-depth back test and they work pretty well. So that's why I'm starting to, you know, apply it myself. Okay, so question from Rashida. Rashida is asking how many pips is 1 minute and 3 minutes. So the 1 minute, we don't have like a set TP stop loss yet for it, but I've been, I personally use, or I'll just say I use 500 fixed TP stop loss. But I mean, you can probably we might try 300 TP stop loss, because I don't know if the 500 is too wide. I've been using the 500 and it's been working pretty well. We can probably go over some examples to see if I can find anything here for that there. For the 3 minute daily counter trend, we use 300. And this is why I kind of think we should use something smaller, because if we're using like, so here's it's like a big difference, right? If we're using 500 pips on the 1 minute and we're using an even smaller one on the 3 minute, I think we should probably use the opposite, right? Probably should use a bigger one on the 3 minute and smaller on the 1 minute. But I mean, who knows? Maybe it just works best with the 1 minute because you get an entry earlier, and it also has a bigger push. So let's go over that right now to show you guys. You guys are pretty familiar with the breakout, so I don't think we need to go over that very much. There was no counter trend trade today. Let me see if there was actually. I don't believe there was, but let's see, 6:30. No. So this was the first momentum signal on open. This wouldn't match because you want to do the opposite. So like basically you're looking for a momentum signal that's pushing the opposite of the trend meter. Right here, it's red and red. So this doesn't fit the requirements for the counter trend. Let's go back to Friday. I want to see if there's one over there. You know what, I'm gonna take this off, and if you guys want me to put it back up, just let me know. But I think you guys are fine with that. Okay, so let's go back to, let me check the calendar real quick. Oh, it's Friday. Friday was the 29th. All right, so let's go to the 29th over here. 6:30. All right, so there's a momentum signal here, but it was not counter trend trade, or it wasn't a counter trend entry. Let me go on the 3-minute to see. I don't think there was, yeah, there wasn't one today, if I remember correctly. So this is something I need to talk to John about, because John did take the buy right here. I'm not sure if, because I'm looking at his, or looking at his spreadsheet, I don't think he skips. Because the thing is, if he skips the actual entry and he waits for like a second one, I mean, that's something that we should know about. Because he did take this trade right here. He mentioned that he took this, and I think he just FOMO'd into the trade. Honestly, he just wanted to cover the loss from today, and that's what I was trying to do too. That's why I took the buy earlier. I was trying to cover the breakout loss. But from my experience, I don't think that we wait for it and then we take the next one. So I'm just going to skip that for now. This right here wouldn't apply either, because this is the first momentum signal on open and it matches. It's not a counter trend trade. Basically, what you're looking for is you're just looking for momentum in the opposite direction of the trend. Friday was 29th. Yeah, so here's one right here. I'll show you the first one right here. This was from last Friday. I'll show you the 3-minute, and I'll go over to the 1-minute right after. All right, so market opened right here at 6:30. I'm going to put up the requirements here for the 3-minute daily. First. Okay, so here are the requirements for the strategy. You're basically just looking for the first momentum signal. It doesn't have to be valid or invalid. It just needs to be a momentum signal, right? So looking at this right here, market open at 6:30. We're looking for the first valid signal. I'll just go back here and we'll just act like this was real time. So if we're looking for the entry real time, this is market open. We're now just waiting for a momentum signal. So there's no momentum signal yet. We're patiently waiting for it to come. No signal there. Hasn't come yet. Hasn't come yet. We have it now here. So with that said, we're looking for the first momentum signal. We have it right here. We want to confirm the trend meter is opposite of momentum. So right here, we have a sell momentum. Doesn't matter if it's valid or invalid. We just have momentum there, right? We look down to the trend meter. The trend meter is green. So the trend is indicating the buy, but we're doing counter trend trading here. So with this said, since we have momentum pushing the opposite way, the trend's up, we're basically identifying a reversal. So with that said, we would take an entry right here for a short against the trend. We'd use a fixed TP stop loss of 300 pips. And then after that, you would let it run. And there you go, full TP. So there is an example of the counter trend trade for the 3-minute daily. Let's go over to the 1-minute. This was on the 29th. Let me see if we could find one over here. I don't know if anything came up. Okay, so here's the 1-minute's a little trickier. So let me just show you guys right here. We did take this trade, and I'll show you why this would have been taken even though the trend meter was blue. The thing with the 1-minute is that the trend meter changes pretty often, right? Like you're gonna see it go from like red to blue or from green to blue like right away. So what you'll do is if you're looking at the trend, you want to look at like what it's been previously. So like you can see right here, it's been red for a long time, right? It was red, then it was blue, then it was red, then it was blue, then it was red, then it was blue. So if you look back at like previous data right here, you already know that the trend is bearish, right? You can even look at the pivots over here. The pivots are obviously bearish as well. So with that said, this is going to tell you that if you get a momentum in the opposite direction, then that's going to be the direction that you're going to be trading if you're counter trend trading. So here is 6:30 right here. This is the 1 minute. I'll put the requirements here as well for that. Let me see, 1 minute. So I'm just gonna change this name here to 1 minute. It's the same thing. It's just TP stop loss would change. And this is something that we might play around with. We can probably use 500 pips. I'm typically using 500 pips right now because this is going to work hand in hand with the breakout. But if we need to change it to 300 pips, we can do that as well. It's just, this is all going to be, we're forward testing the strategy right now. I'm using my live accounts because we do have a pretty high win rate already on the strategy. So I do trust it to some extent. So let me just save this right there. Same thing right here for the 3 minute, but it's on the 1 minute time frame. You're looking for an entry after 6:30 a.m. Pacific time. So you're going to look for the first K2 momentum signal. Right here, we have a buy signal, right? It doesn't matter if it's valid or invalid. We just look for a momentum signal. Next, you want to confirm the trend meter is opposite. So as I mentioned earlier, on the 1 minute, it's a bit tricky because the trend meter changes here very often. So if it changes often like this, you're just going to look back to see where it was. If this was green, then we're just going to have a green moment, a green trend, right? But right now, we can see that it's been red pretty much for the past, 2-3 hours. So we're going to indicate that, the trend is bearish. So with that said, the requirements here are met. There's a momentum here for a buy. The trend is technically bearish. You're going to enter on the open of the following candle here for 500 pips. As I mentioned, we could probably use something smaller. 300 might be good enough, but using what we have as of now, this is what the entry would look like. So with the entry set up like that, we pretty much let it run. And there you go, full TP. So this is an example of the 1 minute daily counter trend confluence or just counter trend strategy. Typically, if you're going to take the normal daily, it would be this entry right here, which looks like it would have hit TP as well. Or no, it would have reversed on you. So this is why we want to typically use, well, if you're applying the 10 minute, then that's fine. That can be used. But if you're trading on the shorter time frames, then you want to be using possibly counter trend, especially when it's early in the market. Because you'll see right here that there will be fake outs, right? Market open right here, price pushed down, and then it faked down and shot right back up. That's why this strategy works so well. Because in the morning, like on open, there's typically a lot of fake outs where it goes one direction and then just completely reverses the other way. So that's why this works so well on the shorter time frames. On the 10 minute, you can still use normal daily if you want. But on the short time frames, the reversals seem to play out a lot better, especially if it aligns with all the requirements. Rashida's asking, even when the trend meter is blue. So you can do that if you're looking back. So like back to what I was saying a little earlier, the entry right here came up, right? If it's blue like this, the difference with the 3 minute and the 1 minute is that the 3 minute stays pretty solid for a while. It doesn't turn blue very often, right? Like it's going to stay green or it's going to stay red. With the 1 minute, it's such a fast time frame that it'll change blue like right after it was red. So this was probably red like right before. So you can see it was red right there. And then it was still kind of red. It turned red, but then it turned blue right after. And then you can see right here. Okay, so look at this entry right here. I'm gonna try to do this like as slow as possible. But check this out right here, Rashida. So say if you're doing this real time, this was actually red. So just look at the trend meter down here. I'm gonna push it real quick. You're gonna see it's gonna be red for like maybe a split second, and then it's gonna change to blue. See that? So it was red there for a while. This was actually red. It's just when the candle closed, it turned blue, like at the last second. Like it was probably red the whole time. And then at the very last second, it changed to blue. But if you want to still use that, I mean, you just look back at the previous trend here. You can use the pivots as well. Like looking at the pivots here, you can see that it's red. Like the red pivot is over the green. This indicates that price is trending down, right? So if the trend meter is iffy, you can just use the pivots. It's the same thing. It's just a stronger confluence if you align both. So for this right here, this is typically how you would apply it. Second part of Rashida's question is the counter trend only valid during New York session? So I've only tested it during New York session. I think John's only tested it during New York session too. So I can't say if it doesn't work or if it does work during other sessions. I mean, it's worth giving a shot if you want to check it out during Asia, you know. Let me see, what time is it right now? Market's closed. So, but let's just, I mean, now you got me interested. Now I want to see. Let's go to Asia session, or let's check out London. Let's go back and we'll see. So we got London over here. Now I'm curious. I mean, I'm not going to be awake during this time, so I wouldn't be applying the trades either way. I mean, I'm not going to stay up for London just to take the break. I mean, it would be, I could do it if I wanted to, but I'm not going to, because I'll be tired for the daily. So basically right here, same thing that we were just discussing. Here is London open at midnight. Here again is another counter trend trade, right? Counter trend trade right here. We have the first momentum signal, trend meter is green. If you were to take this during London session, I think 500 pips might be a little too far. Yeah, it's way too far. You can see that. You know, you probably want to use a smaller TP stop loss during outside New York session. So looking at this right here, we have it set at 300. This still might be too big, but we'll see if it plays out. Yeah, so it actually does play out. So, I mean, if you want to test it, reshoot it, you could. I haven't tested it. It's just, I'm literally just doing this off the fly right now. So it looks like it works solid. For London, let's check Asia. So right here for Asia, there's no entry. The trend meter here the trend was bullish. You had a buy signal right there, so that wouldn't work. Let's go to the previous day again on the 1 minute. So again, right here. So here is the counter trend daily. I'll mark up 630 again right here. So market open at 630. We have a red sell signal right here. Trend mirror is green. It's a counter trend trade, short position. 500 pips. Let that run. Gets close to stop loss right here, but it then comes right back down, full TP. So this one right here would have been another full TP counter trend trade. I mean, it's pretty accurate. I'm surprised that we haven't. I mean, I've been looking at something like this for a while, but I never really. I don't know. I just never really went forward with it. So here's another one right here, or this one would have been skipped. So it looks like London open right here. You would have skipped it because this wouldn't have been a counter trend trade. But if this didn't come up right here, this would have been a counter trend trade, and it looks like it would have played out. So I mean, yeah, if you guys want to experiment with it, you guys are more than welcome. You know, if you guys want to put a spreadsheet together, because it looks like it works well. So I'm like trying to think whether we can just skip the actual entry and just wait for the counter trend move. Then again, you might be forcing trades. So I don't want to be forcing trades. I just want to use something that actually works consistently. What John put together here, I mean, the numbers don't lie, right? It shows you right there that it works really well with a 300 TP stop loss during New York. So that's why I trust the trade applying it live on my own account, you know, during the live sessions. If you guys want to put something together like that, I can review it, or I can help you guys with it too. It's just a lot of work, right? It's a lot of heavy work, I guess you could call it. Trying to get the data together. But, you know, a lot of people are willing to do that, especially if these are the type of strategies that you guys like to apply. So right here for Asia session, there's no entry. As I mentioned before for New York session, like you can trade for a sell if like, so let me see, because we have a buy signal right here, right? I mean, you could technically still take a trade if you wanted to, but I wouldn't necessarily, because you can see how it's not moving, right? Price is actually ranging right here. So let's see how far the range actually pushes. If this would be the technical, like technically the selling trade, be holding on to this trade for the entire night. So I probably wouldn't mess with it during Asia. I think London and New York might be a good time to play with it. But it looks like Asia, I mean, this trade does hit TP, but it takes like forever for it to actually get to that point. Looks like it takes forever in a day, right? Like you can see right here, it goes sideways for so long. It does hit TP at some point, but I mean, you'll be holding on to this trade for a really, really long time. The breakout, you're not supposed to hold it for that long. You'll be holding on to this for about 2 hours and 14 minutes. Let's go check one more example for New York again. So New York over here at 6:30. Okay, so we got another one right here. Let me show you. This is a example. I just want to show you guys an example of an invalid signal so that you guys have an idea. Because I feel like this is something that a lot of people are going to get tripped up on. They're going to be worrying that whether it's going to be valid or invalid, right? This is an invalid signal. It doesn't matter. So looking over here, we have a bearish trend, right? And I know the trend meter here looks super messy, but you can see that the trend meter here was red for a while. It turned green for like one candle, and then it went back to blue, turned back to red, and it's blue right here. The only reason I know that it's bearish is that I use the confluence here with the pivots, right? This is why I use the pivots here where they're colored, just two pivots with two colors. So if you see red over green, this indicates that the trend is bearish. So if you're kind of iffy about this right here and you don't know where the trend's going, you can look at the pivots here. If the red pivot is over the green, this means that it's bearish. If green is over red, that means it's bullish. So with this right here, this is a counter trend trade. Market over here at 6:30 for a signal right here. You could take this right here for a sell. 500 pips, all set up. You let it run. Runs through for a bit, full TP. So, yeah, Rashida, like if this down here turns blue, then you can use the pivots here to confirm it. Because the thing is right here, like you can tell that, I mean, for me, I can tell that it's bearish because I can see that it's been red for a while. Like if this was all green and then we have a little bit of red and some more green, then I'm like, okay, this is probably bullish, not bearish. But you can see right here that it's been red for a while, turned green for a couple of candles. And then this here would be a sell. Let's see, a question from E. E is asking, how is it a counter trend? Yeah, no, you're right. This is just another way of applying it. So I gotta, this strategy is like, it's kind of confusing because you're not necessarily, I know the strategy is called counter trend trading, but you're basically doing the opposite. So if the trend is, you're basically looking for opposites, right? We might have to just change the name of the strategy because the name of the strategy is it's going to be confusing. You're really just looking for an opposite momentum in the direction of the trade. Let me see the requirements over here. Actually, no, you're right. I just confused myself right there, E. No, you're right. This right here would have been the opposite. Or let me look at the requirements again real quick. Sorry, guys. It's just I'm talking to John and I'm talking to Maddie, and like John has one way of applying it, and Maddie has his own way too. Is Maddie here right now? No, he's not. Yeah, because Maddie's been showing me this other way, which what I was trying to tell you guys right now, where you do the opposite. 1 minute. Yeah, 1 minute confluence. So this is like the actual way of applying it. So like you said right now, that would be the way that you'd apply it if you're applying John's way. And it just gets confusing because everyone has their own little different ways of applying it. So, you know, I got to talk to Maddie and John. We got to sit down and talk about this because the thing is, they kind of go opposite of each other. Like how you're saying right now, if we were to take this here, the trend was bearish and this was a green momentum. So this actually would have been a buy and this here would have been a loss. If we were to take it, right? Let me check real quick. There was a couple of things here that Maddie was referring to. Let me check the news because I know that Maddie, he did his own back test on this. And he told me that this is the problem with like looking back at previous trades is that you have to have the Fed was talking this day. What time was the trade? Trade came up at 6:41. I mean, it was kind of close to this news right here, but not close enough. So let me just draw that up real quick. Okay, so news was at 7 o'clock. That's the problem with us coming up with new strategies all the time. There's always going to be little different things to add. And this is why this hasn't been like an official strategy that I've taught you guys. It's just something that we're forward testing. But I'm trying to think if I would have taken this trade or not. So market open right here at 6:30. Super choppy. Did we even take a trade that day? 27. We didn't even take any trades that day. I took a FOMO trade. So I'm looking here at the pretty much that day. It's a quick FOMO off the 3-minute during the live, and I'm done for the day. So I did take a trade that day, but it was just a FOMO. There's no actual entry here. This is just liquidity. 10-minute V3. Here, let me message Maddie real quick. Sorry, guys, let me take 1 second. Hey, Maddie, can you get what K2 US 31-minute daily pattern trend. I thought he gave me the requirements here. Search our chat. You know, I think we're just gonna stick to like John's right now, so I don't confuse you guys, because I'm confusing myself right now with like looking at or trying to remember what me and Maddie talked about and what me and John talked about. So anyway, sorry for the whole confusion there, guys, but we'll just stick to the original entry here for the counter trend. So basically, yeah, E, you're correct. Let's go back over here real quick, and this is the entry. So looking at this right here, the requirements for the counter trend, we're looking for an entry after 6:30. 6:30 is right here. First K2 momentum signal right here is a buy signal. The trend here is, we might have to change this requirement here or add to it, because if the trend meter is if you can't find it to be opposite, we might have to just use the pivots. I'm trying to think what. I'm gonna have to do my own back test on this to see, or not really back test, but I just need to pull my own data, because it looks like this right here. It was just too choppy to really determine where the actual direction was, because you can see it was green right here. It was bullish, and then it just shifted to a bearish bias right here. But the thing is, it wasn't like a clear bearish transition. As you guys can see here, typically when it shifts, yeah, exactly. E said it's kind of hard to say the trend was bearish because it was right after market open, and I agree too. E. So I think for this right here, we probably would have just skipped it, honestly, because look, here's what you typically want to look at when when it's shifting, right? So you can see from here, I'm just going to use this as an example. You can see here when it's shifting to bearish, from here, price stays below the pivots, right? It doesn't come back up and test it at all. It just stays below, and then it continues dropping further, right? It just keeps going further and further and further. The problem with the one that we were just looking at right now for the other day was that, I'll just try to get it over there. And it's the same in the opposite direction. So like, for example, right here, same thing. When price starts to shift the other way, it doesn't come down and touch it right away, right? It breaks above it, and it keeps pushing up a little higher before it comes back down. So like this right here, you can see how price shifts to the bullish bias. It pushes up and it doesn't come down and touch. If you look at the one that we were just looking at earlier with E, right here at 6:30. So here it was bullish, and then the candles here were just crazy. I can't remember what was going on in 27, but I mean, obviously you can see right here, the price is just kind of spiking all over the place. We had it shifting from bullish to bearish, but it didn't really confirm because price was so choppy around this point. It was just going back and forth. Typically, we want price to stay below this point. Like, we don't want price to come up and test the pivots. We want it to stay below here. in order to confirm that bearish bias. But just going over the requirements, like you said, you're completely right. Just going over what John applies himself and what we've been looking at. This here would have been a buy, but identifying the trend here would have been really tricky because there's just no clear trend. This is why it's hard to tell you guys how to identify the trend, right? Because if I just tell you to look at specific colors, like for example here, if I tell you to look at the pivots on the 1 minute, and I just tell you, okay, if red is above the green, this is like automatically bearish. That's going to be super incorrect because you can see right here, it's not even bearish at all. Price is really just ranging. We got a big high over here, and then we have low over here, and it's just one huge range. It's not necessarily going down, and it's not necessarily going up. So yeah, for this entry right here, we probably would have skipped it if we saw it because it's just not a clear trend. I mean, if there was a clear trend, then yeah, we would take it in whatever direction that we go. But I probably would have just skipped it to be safe. But yeah, let's see. Question or follow up from E. E said you should maybe check out the 2 minute. I like scalping NAS on the 2 minute a lot better than the 1 minute. Well, maybe it'd be it'd be good for US 30. Let me check. So we're already looking at this here. We'll go to the 2 minute. Yeah, so the 2 minute here is actually bullish. And this isn't even a big difference, right? Because we're going from the 1 minute to the 2 minute. It's not a huge difference between the time frames. So maybe that would be beneficial for us to or I mean, we could even add that to the trend meter down here. So the trend meter down here is blue. If we were to change it to, I don't even have it on here. I'd have to give this to my brother to update it. But yeah, you do have a point there, E. If you go to the 2 minute here, it's a lot clearer. It's not as choppy. So you can see that it was actually bullish here. So if that was the case, there wouldn't even be a daily here at all, because if it was bullish, you wouldn't be taking this trade here. Let me check up the 3. I mean, the 3 is fine too. It's still choppy as well. In between the pivots, the 5 still bullish, 10 also bullish. I would say use the 10 minutes, the 10 minute trend, but no, I probably wouldn't. I think we might have to do that. So like if the case becomes like that for the 1 minute where it's just too choppy, we can't determine whether it's bearish or bullish. We'll just look on different time frames, or we'll just skip the trade. Yeah, E said 2 minute usually gives more clear, better entries for scalps, whereas 1 gives too many. E said 2 minute daily, LOL. Maybe it's a secret time frame. You know, I think we force ourselves to look at it that way, E, because the thing is, like, no, I've never seen anybody who uses the 3 minute, but once we started using the 3 minute, we started seeing a lot of stuff actually worked on here. And same with like you in the 2 minute, right? So if we're looking to the 2 minute, Rashida said 2 minute had a counter trend this morning. So looking over here at the 2 minute, we'll go over to the market open right here. All right, so market open right here at 6:30. So looking at this here, I don't even know what the TP stop loss would be for this. No, so for this, actually for the daily entries, Rashida, we don't take the opening candle. So this right here wouldn't have been counted for the entry right here. This would actually be, it would match. So this wouldn't be a counter trend trade. So for the daily, we don't look for entry on the actual opening candle. For the breakout, we do, but for the daily, it's like always the one after, because the first candle is typically like a manipulated candle. So like the requirements here, it says look for entry after open. So looking at this right here, there wouldn't be an entry because this one wouldn't be the actual one. This one would be the actual one. but then this one would still be in the direction of the trend. Yeah, but that's only for the daily. So for the breakout, we do count the opening candle because it moves so fast. Typically, if it gives you that entry, it's going to be the prime entry point that you want to get into. But for the daily, since you're looking for a momentum signal, you skip the first one because the catalyst is momentum signal. For a breakout, the catalyst is a strong candle. So you can take the direction for breakout, whether it be on the open or anything after that. So let's see. E said it's very good. So E basically said it's the 2-minute is very good for the V3s and V1s from what he's tested. Let's see. Yeah, I mean, there's like one right here. See that for sure. So yeah, there's a V3 right. Not there, right there. So this is a V3 that like he was referring to. I mean, you guys are more than welcome to try out as many time frames as you want. If you guys find something good, then you know use it. So E over here said that it works for the V3s, which it does. It looks like it worked pretty well right there. But again, if you guys want to try these out, you guys have to like actually try them out yourself. You have to actually test them. You can't just go off like someone else's word. Even though it does work, you want to make sure that you actually test it out and see that it works for you. Okay, so again, right here, another V3. This one went to stop loss. There's another one right here. 57. This one hit TP. So if you're using the proper risk for this, like using same risk percentage, then I mean you'd be fine because this right here, say you use 2% risk win, 2% risk loss, 2% win, you'd be up still 2% equity. Another V3 right there. I think this might be too small. Oh, hit TP2. So yeah, I mean, it looks like you have something here, E. I mean, if you apply it and it works, then great. I'm kind of keeping away from the scalps. The scalps still work perfectly fine, guys. So the main reason why I'm not really doing scalps anymore is because we have people in the group who have like super opposite profits, right? You'll see some people that do really good and you'll see some people that do really bad. And I'm trying to make it where everybody's doing good, right? The problem with the scalps here is that some people will do good because they're applying them properly, and some people will do bad because they're applying them completely differently from other people. They're not going over all the requirements. So that's why I'm just doing the breakout, the 1-minute daily counter trend and the 3-minute daily counter trend. So like there's no difference between everyone's trades. Like for today, I took a loss for the breakout. Everyone should have taken a loss for the breakout if they copied the same exact trade. If you guys did something different, that's fine. But we're trying to document the official trades, right? Like, because the thing is, like people would complain sometimes where I would take my own scalps and I didn't call them on the live because they happen too fast. So I just want to be super transparent and show you guys that like it's possible if you guys just take like certain trades like the daily for the 1-minute, 3-minute, and then the breakout. Because if you do 3 trades a day and you're risking about 1 to 2%, you guys could do perfectly fine because the win rate's high enough on that strategy where eventually at the end of the week or the end of the month you'll be in profit. So that's the main reason why I'm not scalping anymore personally, but the scalps still work perfectly fine. Like if this works for you, keep doing it. And if it works for anyone else, I mean, you guys can do it as well. So let me scroll up real quick and see if there's anything else that I'm missing. I do see your question right there, Rashida, but let me just scroll up real quick. I want to make sure I'm not missing anything else as we continue to move lower. CT said, I take fewer trades when price is at the pivots and when they're sideways. If he does take a trade, he'll jump up a time frame to confirm bias, like the 5-minute, which is smart, CT. That's something that you guys can do as well. See if there's anything else here. Other than that, let me scroll down. Okay, so I think those questions are answered. Kevin said, I mainly trade on the 1 minute, but I keep the 5 minute up and look at both of them simultaneously so that he can determine what price is doing. He also switches between the 15, 30, and 1 hour for liquidity and strong areas of support and resistance. I take a lot of double tops, double bottoms, and liquidity pushes using this method. Nice, nice. Okay, cool. So that's pretty solid, Kevin. I mean, we can probably play around with that. Like towards the end of the session, once we answer questions, and then maybe we can kind of identify like, you know, what you've been doing, and see if we can probably try to mimic some of the trade that you took today. I know everyone wants to trade like Kevin, but not everyone can be Kevin, guys. Like I can't even be Kevin myself. As much as I want to be just like Kevin's profits, he trades in a way that I can't trade on the live. Like I could probably trade that way if I traded by myself and I was focused on the screen, but you know, I'm doing like a million things at once. Like I'm looking at the chat, I'm analyzing, I'm answering questions, I'm taking my own trades, I'm following my own trades. It's just too difficult for me to trade that way on the live. If I wasn't doing anything else and I was just trading, I could probably trade that way. I've traded that way in the past, but on the live session, it's like it's near impossible for me to trade like that. So that's why I don't necessarily trade that way anymore. I also don't want to be on the screen for like 12 hours like I used to. So that's why I've pretty much opted to just take, you know, a few trades a day and only be on the screen for about an hour and a half. You know, it keeps my sanity and keeps me from getting bored of trading, because it'll get boring, guys. If you guys are on the screen all day, it's going to get boring eventually, and you're going to get stressed out, and you're going to get mad, and you're going to give up at some point. So, you know, keep it balanced. Don't be on the charts like 24 hours a day. I used to be that way, and I know a lot of you guys here are that way, or you've been that way in the past. So CT said get a moderator to answer questions and trade away, no distractions. Yeah, no, possibly CT, but so that's a double-edged sword. If I start trading the way that I normally trade, or that I normally use to scalp, the problem is people are going to be complaining because they can't catch the trades because they don't know what's going on, right? I can't like explain what's going on in my head in my analysis as quick as I can saying it out loud. And I'm sure a lot of you guys can agree with that, right, Kevin? I'm sure you can say that too. Like a lot of the stuff that happens on the chart, you don't have time to think. You just see it on the chart and you take the trade right away. It's the same with me. So I mean, we'll see. Maybe we'll do one day where I trade like that, right? Because I still know how to trade that way. It's just it takes a lot of focus, and probably I would have to do it on a demo account, because I don't want to take anything too crazy and end up blowing like all my flooded accounts, right? Yeah, Kevin said no time to think. You have to be fast and just take the trade. Yeah, exactly. And that's typically how it is sometimes too. Like when I'm trading live and I show you guys profits and I'm like, oh, I took this trade. It's hard for me to really like tell you guys like, okay, guys, wait for this to happen. And if this happens, then take this trade. Like literally, if I see a V3 or something like this right here, right? I just take it right away. There's a V1 right there or V3, take it right away without thinking. Like you can just go through all these V3s here and you can see how many variations come up, or engulfing patterns or reversal patterns or anything like that. And you guys will see that you really don't have that much time to think. And you know, it's just it's also me keeping my sanity with people complaining about me not giving the proper guidance or whatever. It's just stuff I don't want to deal with. But yeah, no, maybe at some point, TT, I'll do that, and then we'll just have maybe one day where I'm just trading and I just don't answer any questions, and we'll just zoom through maybe a couple hours of scalping, like straight scalping. But yeah, we'll do that at some point. But right now, I just want to make sure that everybody in K2 does well, and the only way that I can really assure that is by taking calculated trades, right? Like the daily, the breakout, and the 3-minute daily. Those are like the main things that we can actually have control over, because they're really easy strategies to follow. and anyone can take them. E said passing an account in a 1-day challenge. That would be fun to watch. Yeah, no, I used to do that before. I don't know if you were around E like back. I mean, it was like last year. It was like July of last year. Yeah, like if I was to scroll down, where's the media? So I used to pass people's challenges like if someone was like on their like they were like on their last 1,000, they're like, hey Sean, just trade my account. Uh it was like back in like July of like last year. Like if someone was like really like they were about to fail their account and they're just like, hey Sean, just YOLO on my account, I would literally just take a bunch of trades. Like I would just scalp this. I take these during like New York and then into Asia, like the whole day I would just scalp. Um and it's possible. I mean, you see Kevin do it every single day, right? Kevin does it every day. And it's possible. It's just literally just staying on the charts all day and taking a bunch of trades, and getting out in and out quickly. Like for these, you can't have a set TP stop loss. That's why it's hard for me to teach this to you guys. Cause like, if you look here, it was like one of the big days. Okay. So like right here, you can see all these trades here. There's no set TP stop loss for these. It's just watching them move and then exiting when you see price going against you. So like, for example, like there's some trades here where I'll make like 1,700. Some trades where I'll make 300. Some trades where I'll make 700. I don't have any losses, but I'm just like quickly entering and exiting the trades. It's kind of similar to like Kevin's profits. If you guys saw Kevin's profits, you know, all his trades here, they're not always going to be the same. Like you can see right here, he probably identified this as a trade going against him and he pulled out early. Typically, he's making over 1,000 per trade, but on some trades, he's pulling out early. You know, you just got to be smart about it. You got to know what you're looking for. So, yeah, I mean, maybe at some point we'll do that, but as of now, I just want to make sure that I can maximize your guys' probability of passing your challenges, getting funded, and staying consistent. And then once you have that foundation where you know where to fall back to. So say if you go to scalping and then say you screw up, right? You blow your accounts and you need to get back on the wheel. If you want to get back on the wheel, you just go back to applying the breakout, the daily, and the 3-minute. It's going to take longer for you to make profit and to pass, but it's almost guaranteed that you're going to pass, right? That's kind of what I'm trying to show you guys, that there should always be a fallback. Like if you guys want to try something like scalping or intraday or swing trading, if that doesn't work out for you, you can always fall back to the daily breakout, and daily on the 3-minute. So yeah, Kevin said I usually don't use a stop loss when I trade. I exit manually. Yeah, no, I used to do that too, Kevin. When I used to trade my personal accounts, man, I'd go into some drawdown though. Like sometimes you go into drawdown and then you just hold on to it, and you know you'd hold on to it because you knew it was going to come back. You can't do that with FTMO though. Like with FTMO, it's way too risky. If you even go like a penny over your daily drawdown limit, you pretty much blow the account. So yeah, I mean, it just depends. It just depends on what you're trading on. Yeah, no, Kevin said he does have his personal, but not FTMO. Yeah, exactly. So that's another reason why we can't scalp like on FTMO, because you get, I mean, you'll probably reach your daily drawdown pretty quickly if you end up in on the wrong side of the market. So let me just scroll up real quick. Sorry, Rashid, I know you had your question there about the 2-minute. So Rashid is asking, hey Sean, can you check the 2-minute on July 28th at 9:40? Let me pull that up real quick. 2-minute, July 28th, 9:40. Is that 9:40 my time or 9:40 your time? I believe you're like 2 hours ahead of me, so I'm not sure. I'll just pull it up and I'll see. Okay, so you said July 28th at, oh, sorry, my bad. I totally skipped over your second part. You said 6:40 my time. Okay. All right, so 6:40 my time. Right there. So yeah, this right here would be a counter trend trade. You're 100% spot on with that. So let's go over the requirements again for that counter trend strategy. So looking over here at the counter trend strategy on the 1-minute, or I guess this would be the 2-minute. You're looking for entry after 6:30, so you're not counting the 6:30 candle. You're looking right after it. So this is market open. This is the first signal here. It doesn't have to be valid or invalid or anything specific. It just needs to be momentum, so you know which direction to trade in. So you look down to the trend meter. It's green, right? It's pretty clear here that the trend is bullish. So you're looking for a counter trend entry here. If you enter this for a short and you go for 500 pips, you let that run, full TP. So yeah, you spotted that perfectly, Rashida. So I mean, yeah, if you guys want to apply this on the 2-minute, you guys are more than welcome to try it out. I'm personally not going to do it yet because I don't want to do too many things at once. I feel like right now it's already overwhelming for some people that we're taking the breakout plus the 1-minute daily plus 3-minute daily. So I don't think I'm going to be adding anything else onto that. I also don't want to over leverage your guys' risk. If you guys are risking 1 to 2% per trade, you could be perfectly fine because if you're, so say for example, you're doing 1% per trade, right? So I'm going to give you guys a couple different scenarios here. Daily risk scenarios, right? So like say for example, you take daily or the breakout loss, and that's gonna be a negative. You're not getting 2% if you're taking 3 trades because your max daily loss is 5%. So if you do that, maybe like negative 1%. 1-minute daily win plus 1%. 3-minute daily win plus 1%. So total you'll be up plus 2%, right? So I'm just using this as a scenario here. If you take 3 trades here, taking 3 trades, you're risking 1% per trade. You could end up at that, you know. And then if you say you had like a horrible day, like worst day ever, and you lose all 3 trades back to back, and you do a negative 1% each, right? Your total negative loss right here would be 3%, which is totally fine because max daily loss or FTMO MFF would be, I don't know what MFF is, but I'm assuming it's the same thing. It's 5% risk, right? So even if you had the worst day ever, you lost the breakout 1%, 1-minute daily 1%, 3-minute daily 1%, you'd be down 3%, which is not that bad. You can make that back the next day. Even if you were to hit some slippage, right? Because sometimes you guys have seen lately that there's slippage, and this ends up being like, I don't know, like maybe like 1.3%. It's not gonna go up to 1.5. That's like way too far of a push. So if you're to somehow your account gets screwed up and you still end up at like 1.3%, you would still be at 3.9. You'll still be within the parameters of your FTMO or MFF, right? So depending on which trades you guys plan on taking, and this is why I choose to only take about 3 trades, because I think this would be easy enough for you guys to determine, you know, how much you should be risking. I know we had a question today, and I kind of made the same mistake today because I typically use an 8 lot. I was playing around with like or on Friday, I think I was taking like a different trade. Oh yeah, on Friday, I took the 3-minute daily, right? So my trade manager was still set to, it was still set to 10 lots. So that's why I took a 10 lot, but typically I'm using an 8% or an 8 lot. So if I'm using an 8 lot times 500 pips, I'm typically risking 4,000, right? 4,000 divided by 200,000 because my account's are 200K would be a 2% risk. So I forgot who asked it. I think it was, I can't remember, but someone in the group asked during the live, like how much I was risking, and I said 2% because I thought I was using an 8 lot, but I was actually using a 10 lot. A 10 lot is just a little more. It's about 2.5%, right? So for a 10 lot, if you're trading and you're risking 500 pips, it's a 5,000% or $5,000 risk divided by 200,000. It's a 2.5% risk. So I was risking about 2.5%. If I'm to take all of these trades right here, there's no way I'm going to be taking that kind of risk, right? I'm going to be taking something a lot less. So I'll probably be using about a 1% risk per trade. So I think tomorrow, I mean, it just depends. I think depending on how comfortable or how confident I feel about the breakout, then maybe I'll use a smaller lot size or I'll use the full 10 lot. Because what I can do here is I can make a win on the breakout, and then say, for example, there's no daily or there's no 1 minute or 3 minute that comes up, then I'm gonna be stuck with just one win here, which is not a horrible place to be, but it's just not gonna balance out, especially if these trades don't come. So I'll see. I'll have to figure it out. I mean, I'll see what the TP stop loss should be. I'm not sure if like maybe we should change the TP stop loss for the breakout. I know it's at 500 pips now. Maybe it should be better at 300, but that's going to be something that we have to figure out along the way. The only problem with the stop loss right now is that we're in the summer, so the volatility is super low. So typically 500 pips will get hit right away. If you guys have seen for the past couple of weeks, it takes a while for it to hit 500 pips. So maybe a possibility of us changing that. But I mean, who knows? We're just have to play around with it. As the seasons change, you're going to see volatility pick up. So 500 pips are going to be perfectly fine. Say September, October, November, December, once you reach the fall season. But right now, it's going to be hard for us to determine if market's going to be moving slow or if it's going to pick up over the next months. Sorry, guys. Sorry, guys. Very much. All right, guys, I'm back. Sorry, I had to go let my maid in downstairs. All right, so let me see if there's anything else right here. E said, holy, I just did a backflip off my chair. But yeah, guys, if there's any other questions, feel free to put your questions in the chat. Thanks, E, for introducing the 2-minute chart. I never would have thought to look at the 2-minute chart, but I mean, it seems like you could find something on any time frame, really. I've seen some people in the group who trade on like the second chart too. It's crazy. I don't know how they do it, but there's a couple people who trade on I've seen some people trade on the 5-second. I'm like, I don't even know how could you guys even make any entries off this, because the spread, I mean, it makes it nearly impossible. Even the 1 minute's hard. But just looking at this here, let me see if I can find anything. All right. Sorry, it's dark. Looking at the 5-second over here, I've seen some people apply variations on here, which is crazy. I don't know how it even works, because looking at the movement here, let me see if I can find one variation. There is I mean, these are just hard to find. I don't know how people even trade on this. Okay, so there's one right here, one variation. I mean, yeah, I guess you technically could. You're just like super, super restricted. Because if you were to apply a variation like this right here, like, yeah, it would hit, but I mean, I'd be pretty stressed out trading on this. E said, I just like 2 minute because it's less noisy than the 1 minute while being volatile. Yeah, and I agree too, E. That's probably a good decision. So I'll probably play around with it as well. And I'll see if I can find, anything on my end. But I mean, for the most part, it does look pretty solid. I think anything below the 1 minute is just it's just too difficult to trade on. But I mean, if you guys can find something that works on those, go ahead and give it a try. Other than that, I don't see anything else here. So if you guys have any questions, feel free to put your questions in the chat. We've been on this mentoring session for about an hour and a half. So that's typically the time that we stay on here, unless we have a lot of questions. I'm free to stay on here if you guys want me to, but unless there's any other questions, we'll probably just wrap this up. Just a heads up, guys, I'm going to Hawaii on Thursday. So I don't know if we're gonna have a mentoring session that day. My flight is at like 8 o'clock. So unless I go to the airport really early and trade from the airport, which I don't know how the internet will be out there, it might not be possible. I will be trading on Friday though. There's a huge time difference. It's a 3-hour time difference. So I'm gonna have to get up at 3 o'clock to trade with you guys on Friday, which is completely fine. But just a heads up. So maybe on Thursday, we might not have a live session. I'll try to be live with you and maybe catch, or maybe even just be live for a few minutes to see if we can take the breakout. But we're just gonna have to see how well the airport internet works with me streaming live, because I can be available with you guys during Telegram, but I don't know if I'll be able to stream. But other than that, I think that's about it for this mentoring session, guys. So if you guys have any other questions, feel free to email me or message me on Telegram. I will be in Hawaii next week, or I'll be in Hawaii for like a whole week. So I'll be in Honolulu from Thursday up until Tuesday. So I will be posting lives all throughout. The mentoring session next week might get pushed back a bit though, since I'll be on vacation on Monday. I will probably push the mentoring session back to Thursday or Friday next week. So if that's an issue for anyone, or if there's a specific day that you guys want me to host it, just let me know, and then I will try to find a way to work around your schedule. So, all right, guys, I think that's it for the session. If you guys have any other questions, feel free to reach out. Otherwise, I'll see you guys back here tomorrow morning for the next live session. Hopefully we bounce back from that breakout today. And hopefully I'll be able to apply it properly. So my bad for you guys if you guys took the trade today with the breakout. I did take the loss with you guys if you guys did take it. We should have been trading the other way, but it's all good. We live and we learn. All right, guys. So I'll see you tomorrow. If you guys have any questions, reach out. Otherwise,